I'm Sandy Franks. You're watching Taipan Financial News, the first financial news show developed exclusively for the internet. Tuesday marked a major milestone for the U.S. Sometime early Tuesday morning, the United States population grew to 300 million people. Several years ago, when the U.S. population officially hit 200 million in 1967, President Johnson held a news conference to hail America's past and to talk about the challenges ahead. Life magazine even sent photographers to find the 200th million American. They declared that person as a baby boy born in Atlanta named Bobby Wu. Of course, no one can say for sure when the newest milestone actually happened. Some suggest the 300 million mark occurred many months ago. U.S. Census Bureau staff suggests it was sometime on Tuesday. In fact, Howard Hogan, the Census Bureau's Associate Director for Demographic Programs, was quoted as saying, "I don't think anybody believes Tuesday will be the precise moment when the population hits 300 million, but we're confident that we're somewhat close." The population growth isn't the only milestone worth mentioning. Let's talk about the Dow. Earlier this week, it missed the magic number by 3 points, but today it hit the 12,000 mark. I also want to draw your attention to another important index, the Dow Jones Transportation Index. My next guest is going to tell you why a record high in this index is just as important as the Dow itself. Christian DeHamer is senior editor and creator of the Red Zone Profit System. His proprietary system has gained nationwide recognition. The Red Zone system has been featured in numerous financial outlets, including the Los Angeles Times, Forbes, MarketWatch.com, StockDoctor.com, Money Matters, Personal Finance Radio, and On the Money, just to name a few. Chris, thank you for joining us today.
You're welcome, Sandy.
Chris, you've been studying this relationship between the Dow Jones Industrial Average and the Dow Transportation Index for quite some time. What do these two indicators tell us?
Well, they simply tell us that we're in a new bull market. The Dow theory is what it's called. It's been around for more than 100 years and has proven itself 92.6% accurate over that time. For a 60-year period stretch, it never made a mistake. And it was 100% accurate. And it would have turned $100 into $11,000. So what you do is, Charles Dow, the originator of the Wall Street Journal, invented this system when he gathered together 12 industrial companies, that is, companies that make stuff, and a couple of railroad stocks, that is, the companies that deliver stuff. And if he figured that if all these stocks were rising, the economy's doing great, and we're in a bull market.
Now, how many times when you've gone through this, how many times have you seen where the transport and the Dow Jones Industrial Average, when they both have reached highs, where this has produced a signal that this is a great buying time?
I believe the number is there's been 16 confirmed Dow theory buys, and it missed one in 87, I believe. And so right now you have a period where the Dow is hitting all-time highs. It started hitting a new all-time high October 5th. Everybody's worried about the 12,000 number, but that really wasn't the number. The number was the all-time high. And so the Dow Jones Transports, the stocks that actually deliver stuff, material goods to the consumer, those stocks hit an all-time high back in June. And they sold off a bit, but they haven't broken their uptrend. So if you take those two confirmed highs, then we are in a new bull market.
And so that's what you're telling your readers, and you want viewers to realize right now, that we are at a point where this is a great buying opportunity.
Oh, absolutely. I mean, whenever it's the bullish thing that could ever happen is stocks hit an all-time high. That's bullish. New 52-week highs, bullish. All-time highs, very bullish. You have a system here. You have a Dow which has been stuck in a trading pattern just as all major stocks, non-resource stocks, have been in trading patterns for the past 5 years since the tech wreck of 2000. And now you're starting to see those companies like Oracle break out of that 5-year trading pattern. The Dow's broken out of that 5-year trading pattern. And what you have is a chart pattern called a coiled spring. So all the energy encompassed in that 5 years, every time the Dow approached 1159, I believe was the intraday high, it got hit by sell programs. Everybody would sell the high because that was the top of the range. All the sellers are out. now that the Dow's at 12,000, that means all the sellers are out and the buyers are taking over. Definition of a bull market.
Makes perfect sense. And I want to ask you about your system, but first let me ask you this question. Since the Dow did break the 12,000 mark, where do you see the Dow going in the next few months?
Well, I think you could see early 2008, I think you could see a 16,000 on the Dow. By 2007, let me put it this way, the Dow's up about 1,100, 1,200 points in the past month and a half, or the past 3 or 4 months. But in 2003, it went from 7,500 to 10,500, 3,000 points. So I don't think it's unrealistic at all to project, as long as, I mean, there's always, I don't have a crystal ball or anything.
Right.
But, studying historic chart patterns, when a stock or an index breaks out of a sideways market, all that power launches it up. And I don't see it unrealistic to put 16,000
wow.
on the Dow in the next, year and a half. But I think we'll have a sell-off here at some point. It'll go back to the bottom of its range, say 11,600 or 11,040 are the two numbers that came up, before bouncing back to maybe 1,300 to end of the year.
Okay, I think those sound like great numbers. Now I want to go back to your system, and I know you have a proprietary system that you developed. Can you just tell us a little bit how it works?
Well, we at the Red Zone Profits, we mix fundamental analysis with technical indicators. Most fundamental researchers, analysts would have you believe that you just buy low PE, safe, clean balance sheet, things of that nature, insider buying. We like looking at those, but the problem with that system is you could hold those stocks for a very long time before you ever see any action. What we like to do is find those companies that have strong fundamentals and apply some technical indicators to them to show them breaking out or moving upward, percolating, showing some life, and then we'll buy then. We might miss the bottom 5 or 10%, but we'll pick up the 60, 70% of the upside.
So how accurate is your system?
Well, for 2006, we've had 40 picks and a 45% average gain. We've had picks like 97% from Solid Air, 337% from Evergreen Solar, 243% from CMEX. Over the past 5 years, our cumulative gain is up 8,976%, which is, a solid record.
Absolutely. So, Chris, where could viewers get more information on not only your system, but on the Dow theory?
Well, I'm glad you asked, Sandy. Go to redzoneprofits.com, and you can find out all about it.
Thank you very much, Chris.
All right. Thank you, Sandy.